Hi everyone, welcome along. Thanks for checking out this video. In this video I'm going to take a look at how to identify when a trend is ending, and we're going to take a look at then also how to approach a market if we believe that is the case. A market, we've got a perfect example at the moment that I've been getting a lot of queries about, and that's regarding the euro. And the reason why I want to look at that at the moment because of the conditions that we're actually seeing in the euro, and the questions that I'm getting from people. Are we still maybe even at the beginning of this? Are we looking at maybe halfway through? Are we heading to going to 120? Are we going to 130? Where are we going? Or actually we're heading back down towards the low, possibly into the 110 area. In this zone, it's very easy to make wrong decisions, lose money, and hand money back potentially that you've been taken from the market trading the trend. So in order to understand what we're actually dealing with here at the moment, where we are within the cycle, where we are within the trend, got to understand the makeup of what's actually driving this in the first place before we can actually then make a proper, true, informed decision of it. So I want to take a look at trend to begin with. How do we know where we are, and how can we make the correct decision at the right time? If we begin simply, if we look at where we're at in a normal action of trend, the market trending higher, but typically at some point in the cycle we're going to get to the point where we've just gone too far. We've just overheated. But unfortunately, a lot of people don't trade early in the cycles, don't trade these early areas here. Most people, particularly in a sort of retail sector, tend to get more interested in these areas, and then unfortunately we get a huge portion of people that get really excited up here. Really excited as the market's been beginning to overheat and getting towards the end. And say what I want to focus on here is how we know, or how can we identify the possibility that this is going to be the end, so we know where we are within that cycle. Because too often it will be the case where a market begins to retrace and everything's looking fine, and we start to continue to be a buyer, and the market just turns and rolls over into here. That time and time again, every time I buy into a trend, it ends, it rolls over and reverses. Or anytime I sell in a downtrend, it rallies. So we've got to understand what's actually going on in here, what's really the conditions at this point in time, to know whether should we remain buyers at this point, and how can we actually tell whether we are here, potentially are we here, or are we back in these areas where we've got lots of room still to run. To do this, we've got to understand what the conditions are when it comes towards the end of a market, it comes towards the end of a trend. Typically, as the trend comes towards this end, we see trend has been moving along nicely, and we start to see it accelerate. And the problem with it, market, when it accelerates towards the end, and we've been in this trend for a while, there's no period, no set duration how long the trend can last, but we will see the number of people interested in that market, the positions, the number of buyers. Those buyers will reach an extreme. And the downside with this is we've got no fuel left for the fire. There's nobody left to come in and continue to be a buyer. We need to fuel the fire with more and more buyers to take it to new, more and more highs. The second factor, something that was very, very similar to what we've just discussed there, and that's the level of interest. I mean, measured in different ways. The level of interest in the market. People tend to get very interested whenever they start seeing headlines on different online blogs, starting to see it in the media, talking about certain markets getting to a new high or a 5-year high, etc., and it's starting to get into the headlines, and we get a lot of interest in the market, and we start to see the trend again start to accelerate as the interest and people start to pile on, and we'll see the level of the buyers actually coming into that market, and they're piling in as well. It takes the interest driving that market is a lot higher. We typically can measure this by looking at what's known as open interest, so it's the actual level of number of buyers in that market, a number of positions in that market. And another way of looking at it is also this piling at the peak. Again, you can see this from the price action quite often, where the trend has been quite mundane, quite boring early on, and then all of a sudden we just start to see these real big accelerations, the upswings becoming more aggressive, more violent, and price action becoming overextended. And again, if we were able to look at the actual level of buying, it would have started off quite mundane, quite controlled, and then all of a sudden we typically see these big spikes here. Now, combining those all together, the factors where we have extreme positions, so we have all the fuel in the fire, all the buyers in, we see them piling in here, the interest at its height. There is no fuel left to say the people that have been buying earlier in the move start then taking profit, which accelerates, becoming a domino effect, and the market starts to roll over. So how do we know if we're in this kind of an area? What can we actually use to identify if we're in this area here? The only way we can do that is by looking at what's called the commitment of traders, because it's the only way we can actually see what the positions are. And as for the first factor I looked at, there was extreme positions, and if we look here at the euro at the moment, we do see a large number of extremes within the positions on that market. We see commercials, the commercial shorts at an all-time high, their net positions at an all-time low. The big speculators, the banks, the institutions, their net position, their net longs at an all-time high. The trend traders, your non-reportables, your retail trader, they're also at an all-time high on their net. Talked about the open interest as well. It's also at an all-time high. So we see extremes across the board in that market right now. If we look over and actually take a look at that in the positions themselves, if we look at what the euro is pushing towards, first of all, we look at the non-commercial positions, we'll see the level of buying. Their buying is pushing up towards extremes. Their net is at an all-time low. Their buying is also pushing up towards highs we haven't seen since the last peak back here in 2018. The non-reportables, again, back getting towards extreme levels on the long side. Getting to the areas where we've seen peaks in this market. And talk there about piling in at the end. If we take a look at particularly the non-reportable positions this week, we look at their jump in long positions. We take a look in their jump, so we zoom into this and look over to the last 3 years. We've seen a big jump. That's what the 19% jump in here refers to. You can see a big spike up in their long contracts. You can see that in their huge jump from just over 200,000 toward 250,000 contracts in a week, and we've come down here from sort of the 106, 107 area, and now pushing up towards 119. We've came a long way, and now they're just piling into this. So we're seeing all the conditions being met in terms of how we typically end within a market. We are seeing extreme positioning in the euro. We're seeing commercial shorts at an all-time high. We're seeing commercial or non-commercial long, the trend followers. Anybody who can effectively be a buyer is involved in this market as it stands. Interest in the market is all over the news. It's the headlines. The open interest, as we just looked at, is at all-time highs, and we can see as well that people, the fear of missing out, the big piling at the end of a peak where we get towards they start to show signs of exhaustion. We're also seeing that as it stands at the moment. So if we look what the original question and try to understand where we are within the cycle currently in the euro, are we in these lower areas? Are we in these areas down here potentially? Or are we up in this area? And based on what we're seeing at the moment, the conditions, what we're seeing, we look to be more in this, realistically more in this area. So what do we do with that? What do we do? How do we approach it? How do we what trading decisions can we take? So the likelihood is that we're going to be looking at a correction in euro. Now the issue with what some people tend to do is tend to jump a little bit quick. If we go back to where we were previously, the last time we seen similar conditions to what we were at the moment, this is what the euro did. So it doesn't instantly have to roll over and drop like a stone. It doesn't have to do that. But nice, we did eventually did it. But we actually stayed and consolidate up here for about 3 months, just over 3 months. So, but what it means is if we are looking to get long, the idea is being trend traders, we want to be staying with the trend for as long as possible. But we got to be aware of the fact that where we are in the cycle, and the likelihood is that we're probably capped in here. 120 is a nice level, and we could get up towards that area, but the likelihood is we're probably capped in here for a little period before, and the likelihood is we're going to see a larger correction. So there's more downside potential than there is upside, but say we could be in here for a while. So we got to trade this accordingly. We don't want to be piling in, taking large long positions in here, because the reward to risk isn't great. The reward to risk isn't in our favor. We also don't want to be taking huge positions to be on the short side, because we continue to push higher. and trying to find a safe place to stop. We could consolidate in here for a while before we eventually roll over. So it's not a great position to be taking, you know, large shorts either. As it stands at the moment, the trend is still intact. The safe option would be, if you are still long in a trend from lower levels, to try and stay in the trend as long as possible. I would typically, in this sort of scenario, I'd use a stop loss, the lowest low of the last 3 days, so I'd be out of this from in here anyway. But if you're looking to take new position, new long trades, you still want to stay with the trend, the sensible approach for this would be to stay in a smaller time frames, dropping down into trading on an intraday basis, taking smaller chunks where the reward to risk is still stacks up and still is in your favor, but trading conservative, having conservative targets, knowing that the upside is restricted from where we stand. And then whenever we get a confirmation and a break of trend, then looking to actually go on the short side. But as it stands at the moment, see, the trend is still strong. Momentum is still to the upside. When buyers come in, typically when sellers come in, buyers are typically swamping them and forcing them out, and we're continuing to push higher. But we know it's implied. It's a bit like you plant a seed for a tree. You don't see the tree the next day, you wake up, but it's implied, it's in there, it's there, it is coming. It's the same what we see currently in the positions within the euro. There is a limited upside potential. There's a much larger downside correction that is coming, whether it's today, tomorrow, next week. It's in there. Say previously we had those last all-time highs. It took 3 months within that consolidation before we actually broke down. But you got to trade accordingly. Keep the longs conservative from where we currently sit. If it's valid to take longs based on how you trade, you continue to do so, but keep the targets conservative and trade within the means. Hopefully that makes sense, guys. Hopefully you're able to understand a little bit better of where we currently are within that structure, what Euro's trying to do, and the conditions that are there. I say, but we definitely, too many people make the mistake and are trading, only really getting interested in a market at the end of a trend. And the only way to understand the end of a trend is to understand the conditions that create the trend in the first place, and also those conditions then that create the end of the trend. And the three main ones that we've just went through here are all present as it stands in the euro. So take that on board, trade accordingly, trade within the structure of what we've got and the conditions that we've got, and you can still trade profitably in those conditions.